All right, we're back in action. Bulletproof Traders in the house. Ladies and gentlemen, welcome back. It is Wednesday today. Well, it's actually Thursday. Very early hours of Thursday. And this is our market overview and portfolio breakdown. Probably my favorite video. Talking about our positions straight up. No mumbo jumbo, right? So let's go right ahead, dive in. We have 4 active positions to talk about, but I will also throw in a couple more interesting opportunities to hedge our position, which is positive, right? It's long, it's a bullish position, both short-term and long-term. Nevertheless, I see some risks coming up for a potential technical correction. Something local, I believe, potentially, we'll see. It might actually end up being more than just local. So that's the risk I'm talking about, and I have a couple of a couple of assets that I'm going to talk about that we will potentially use to hedge our position. Our main position, which is, again, like I said, bullish. So let's talk about, we'll start with the 4 positions we have, right? So Cardano, ADA, on its way up, supposed to reach 82.64 according to our, CPM cross price matrix analysis, right? So, and here at the bottom, we think, it definitely showed the capacity for a turning point. Then, looking at this from a second angle, we can see it's pulling back just below 69.95. I don't like that too much. Now, we do have 4 trades, and here's the kicker. We need price action to actually pull back above 69.95 by the end of the day. If it's going to dip below, that's not good. We're going to start basically shifting from offense, from attack, to defense. Right, we're going to start getting into that defensive mode. For now, we're still on the attack. So I can see a scenario where price action is not going to be able to break below and it's going to start coming back up. That's the favorable scenario, obviously. That's the Cardano situation. If it's going to dip below, then we're going to get into defense, meaning we're going to start pulling out trades. If it's going to dip below 67.28, that's the end of it. We're pulling the plug. All right, Solana, again, coming from the bottom, having a nice bounce, nice tipping point here, right off that 153.36, suggesting it wants to come back up to where it came from, 178.47. Sorry, 178.74. That's the target here. Now, sure, it hit the secondary target. By the way, we took profit at that point, but then it started to make pretend to break out, and we actually fell for it. But as it was starting to turn back down, we actually did take one of the trades out, so we did reduce the exposure from just a concern that it's going to fail to break and have a technical correction, which it does seems to be having. How far it's going to go, that's the question, right? So if it's just local, then that's fine. It's going to come back and have a second attempt on the breakout, probably be successful that time. But if it's something more sinister, it will continue to drop, and at some point will start to break below 153.36, and that's a no-go, right? That's what we're going to be pulling out. All right, so that's about that. Okay, so now we have Avalanche, which we also took profit already because we hit the secondary target, 22.54. Boom, hit it and got rejected, which was expected, nothing out of the ordinary. Now we can see what's coming from below. It's 21.49, providing support. If that level is going to hold, then that's great. As it starts to turn back up, we're going to go right back to loading up. And then especially once it starts to break above 22.55 here, that's where we're going to get aggressive, because we're going to have a lot of confidence that price action is going to close the distance to the target, 25.48. All right, now stop loss level 19.3. Last but not least, Ripple. And this is again, okay, so here we actually have one of our hedging tactics that I told you about at the beginning of the video on two other assets that we're going to talk about. Well, there's a third one right here on the Ripple. Even though we do have a bullish campaign right here, right now, if this continues to comes off and starts to break below 223.30, then we're going to hedge this position by establishing a short trade, but not closing the original bullish ones, right? These two buy trades. We're going to keep them alive. Take a look where the stop loss level is, deep, right? It's 195 or something. So we're going to start chasing the downside with an equal size short position in an attempt to catch that move, right? Collect that profit from that short position and let price action casually turn back up, because the breakout might come on the next wave, not this one. Take a look. I mean, we only have 1, 2, 3. It's usually the fifth leg that's doing the breakout. So I do think we might have some more of that downside move. That's where my hedging tactics is going to come in handy. Take a look at this. So yeah, I'm not going to take hey, here's the game plan. Not getting out of the Ripple, accommodating a technical correction. Not getting out of the avalanche, also trying to accommodate a technical correction, a deeper one. As far as the Solana goes, trying to also keep that alive as long as it stays above 153.36. And with the Cardano, as long as it stays above 67.28, right? Otherwise, we have to split. But here's the hedging tactics. Bitcoin Cash. We have a 1, 2, 3, 4. I can see a fifth leg. Easy. So once this starts to slide below 419.19, that's the trigger. Guess what? Game is on. We're going to short the Bitcoin Cash to 389. All right? We're going to try to get a little bit more aggressive here on the downside, so we make sure to hedge all of those other bullish campaigns that we're going to try to keep open. And then there's the Ethereum. Now it already reached the top of its capacity as far as this trading range goes. Hit the last line of defense, last line of resistance, 2836.5. Boom. Right? Touchdown. Now you can see the reaction. So this could be a very nice turning point actually. If we count the legs, it's 1, 2, 3, 4. We do miss a fifth one, and then the sixth one will be the one to break out because price is coming from below. So I see a move here all the way down to 24.16 or 24.17. So again, all we need here is a second negative day. So let's imagine today is going to end up negatively. If tomorrow is going to end up negatively, then we're going to be firing off a short position with a stop loss level around 29.50 or something, and trying to chase 24.17 and hedge the other bullish campaigns that we have. All right, that is the game plan. Now, is that my preferable scenario? No. I would rather have the Ethereum starts to smash that 28.36 level and march forward. Same with the Bitcoin Cash. And of course, for the rest of our bullish positions. But I suspect that not might be the case. I don't want to put numbers or percentages on this, but I'm just ready for both scenarios, right? And I guess that's the most important part. We have a game plan now for both scenarios, and it's definitely going to be one of them. All right, hope you enjoyed that video, guys. That was a quick, not that quick actually, but a nice breakdown, rundown on our situation in the market right now. That's about that for this one. We'll see you in the next video. Take care.